What's going on, traders? I'm Antoine Farrar back with another trading video with Digital Goats Academy. Welcome to our weekly review, where we pretty much just do a review of the market for the previous week, right? So if you follow this channel on YouTube, one, hit that like button, comment, and subscribe. But also, if you follow us, you know that we primarily discuss indices, but we are transitioning to Forex pairs. Again, if you're new to this channel, you probably don't know. Well, if you are new to this channel, you're probably here because of foreign exchange trading. So that's what we primarily focus on. We do talk a little bit about the stock market, cryptocurrency as well, but we cover all things investing. But if you're paying attention to us, this is just foreign exchange. So let's go ahead and get into the market for what happened this previous week. Now, if you're looking at my screen, I have US 30 here. So what do we always talk about as far as like the time frame we want to start off from? We want to start off from the weekly because we want to get an idea on what the market overall sentiment was in that direction. Because the higher the time frame, the truer the direction, right? Maybe you traders have heard that before, but if you haven't, you're welcome, right? So this week, this previous week, US 30 hit a sell that we were over anticipating since like a week and a half ago. I might say 2 weeks, but we were anticipating that there was going to be a major sell. One, there was a lot of negativity surrounding the market, and also it just needed to do a correction. How many times are we going to get fooled where we expect the market to continue in a direction, but we don't follow the laws of market structure? I mean, it's pretty common at this point, very basic as a trader. So understanding like the flow of the market is important, I would say, as a trader, but let's just go ahead and go into US 30 and then I'll go into S&P and then pass it on to my co-trader who will introduce himself when he jumps on, right? So US 30, where do we start from? Okay, I remember. I almost forgot what happened. So this is where we got our first signal that the market was going to sell off. I mean, we already knew that it was building resistance up here, but this was our indication for the actual trend, right? Because over here the market was still consolidating, and even though there were still good opportunities to sell the market, you still wanted to, have a major move that the market was actually pushing down. So this happened Sunday. We're starting on the previous Sunday, which is November 2nd, right? So the previous Sunday, you could see the market gapped up. We expected this. The reason why we expected this is because not a gap, but we expected the market to actually rise up. The reason why we expected that is because there was an imbalanced candle over here. You see this bearish candle right here? That's imbalance. And what I mean, if even in simplest terms, like as a trader, you can see that there's no information to the right side. Prior to that, there was no information on this right side, right? If we just hit the rewind real quick. So there was no data. We were basically waiting on for the market to react after Friday, right? So basically after Sunday opened up, it gapped up slightly, kind of consolidated, pushed up, and then actually started falling. And we can kind of see it play out from there. I think I got this on yeah, let's put that on one. So you can see that was the gap right there. And again, you can see a time base. Obviously, that's going to present itself at 6 o'clock p.m. Eastern time, or I think that would have been 7 o'clock Pacific time. So you can see it starts showing us that yes, I am falling. I am falling down. London Bridge is falling down for sure. So this was basically the entire move in the market this entire week. And we basically predicted that. We did predict that the market would probably be bearish the entire week up until NFP, which was on Friday. Now, NFP didn't respond, like didn't have the market going out of whack like it normally does. Very docile, if you ask me. But I think with between the major news events that we've had, like the interest rate decision, I think that everything is priced in now, and what we're looking at is just a continuation of price action in the market, right? So I'm gonna let this play out, so we can just discuss like what happened up until Friday, because Friday was kind of like the game changer on the possible reversal of US 30, which we were looking at already. make no mistake, we were looking at this market already to buy up, but we know that there's going to be opportunities where the market has to itself. And then when it corrects itself, obviously those are opportunities for us to still ride the trend down. We don't try to ride them forever, but definitely, man, I love that. That's the move that we caught where it was building up resistance over here. So you can see that it even brought itself back up. What was this? Wednesday? Wednesday it brought it. What did we have Wednesday? I think so. The Bank of England had an interest rate decision, and I think it was CPI data. I can't remember. I think it was CPI data, if I'm not mistaken, that we had on Wednesday. So nothing really happened. It just built resistance right up here. So you can see a builder ceiling and then just push the market down. And then basically Friday is where towards the end of the day. So Friday towards the end of the day is where the market decided to reverse. I guarantee this is 12. Yep, 12 o'clock candle, market reverse from selling, from continuing to sell from Thursday and Wednesday to push us all the way back down to an area of what? I don't like that. Yeah. Consolidation, right? One, we had information over here. How do we know that the market was going to drop down? At the very least, we had this information to the left of us, which is the gap. There was a major gap that happened Sunday, October 26th, and we knew the market was going to try to target. Each time it played around that gap, pushing the market up to build resistance and then actually start falling down. So it did claim that, I mean, fill that gap, and it rejected a common area that we see within indices, which is the structure of consolidation. Remember, the market moves three ways: up, down, sideways, right? So we know that indices, if you've been trading indices all year, or if you've been trading indices for like the past 5 years, you can see that indices is always attracted to a form of consolidation that you did not pay attention to. So what did US 30 drop down to? The consolidation zone that we had here. Now I did just annotate this today, but I did have this area marked up in a different form. It just wasn't annotated like I normally do my consolidation patterns, whether they're tan or orange. I think we're going to go to orange now because I like that color. But anyway, so we see a target consolidation. It tested within this zone. Now, with this being such an aggressive big ass bullish candle, bullish engulfing, or you can say big ass bullish candle, whatever you choose, right? We need some type of correction, whether it's going to consolidate or whether it's going to push down. I'm kind of hoping we get a gap down, and that'll give me a little bit more clarity that, yes, this is the official buy zone to bring us back up and hit that 50K area. I'm not, yeah, well, we have a month and a half left. Yeah, we have a month and a half left, considering this is the half month, right? So could we hit 50,000, 50K before the end of the year? I'm not sure. I think we'll be extremely close though, but if the market stays, if the momentum is aggressive to the upside as it is this candle, then yeah, for sure we'll hit that target before the end of the year or probably at the end of the year. So I'm hoping that we get that. But let's go into S&P. So that's basically what we had last week. If you look on a weekly time frame for US 30, it was just a correction. Obviously, the market was like, this candle was way more bearish to the downside, but this is our rejection. So now when we have the open of this new weekly candle, we obviously want to see what some type of push down in order to at least test a little bit of of this wick. I don't know what percentage of the market is going to test, what percentage is going to test this wick. But I'm hoping that we get close back to the support zone and then buy up from there, or however the market is going to form whenever it opens up today. We still need for Monday to clear because obviously those are going to be manipulation days. But like I said, like I think that was our pullback in order for the market to buy up. I'm hoping this is one of the days where it just opens flat right here and then we continue to push up to the upside. But anyway, a man can dream, right? Well, let's go into S&P before I pass this over. S&P did the same thing. Now, the one thing I've been noticing with S&P and US 30 is that even though they have been two of the currency pairs, like as far as like indices that tend to follow each other or mimic their movements, they haven't been doing it exactly like they've been doing it after March. So after March we had that we had those tariffs that were imposed. Trump was just like, you get a tariff, you get a tariff. So we saw a lot of mimicry between US 30 and S&P, somewhat NASDAQ, but again, I believe that the NASDAQ can do completely the opposite of what S&P and US 30 does when the market is live, right? So they've been following each other, but not exactly again here. So this previous week, obviously S&P did the same thing. It sold off in order to correct itself. Now, all we were thinking was that price was selling off to correct itself. S&P seemed, well, both of them, both S&P and US 30 actually test back into the area where Trump had mentioned that he was going to do another 100% tariff on China. So we tested back into that zone. Now, S&P has kind of been my guiding light for US 30 because one thing that we did want to see from S&P is it tests back into the top of that gap, that major gap that the market created. So you can see it on a higher time frame. You can't see it right here. Well, oh yeah, you can't see it because the market has obviously, this is where the gap is at over here. So can't see it just because information is formed already. But what we were expecting is for price to test at least the top of this gap, and it did it perfectly. I mean, you couldn't have a better entry than this. I actually started buying US 30 like from those bottom positions after I got wiped out a little bit. So you can see there was another gap right here that it confused me because the market never came back down to get this. Now I'm going besides the point of what happened this previous week. So let's just focus on, yeah, this was the gap. I even mentioned this. I mentioned to my community that this would be the gap. This should bring the market down. And we after that gap that opened up, let me see what time frame it was on. It was very small. Wow. Yeah, look how small that is. So the gap was small, but the market was still going to react to it. So this is like on like a 1 minute or a 2 minute time frame, maybe 5 minute. But you can see how small this gap is, and I had to kind of leave like some type of notation there to signal that, yo, there's a gap here because it's hard to miss if you weren't actively looking at the market. Now we were actively looking at the market last week. I saw that the market it gapped down. Was it a gap down? No, it gapped up and then it needed to test this area. So no, it gapped down. It gapped down. It gapped down and it needed to test this area. So you can see because of how small this gap was, now that was the gamble in me assessing that the market wouldn't come back up here. But how small the gap was, I thought I looked at it that once we filled it with the wick, we were going to push down. And that's exactly what happened. The market actually started falling off from there. And the next time that you had to get a pullback, which we did identify. We did identify both this entire area for the market to pull back to. I didn't expect it to pull back as many times as it did. So you can see it played the support structure. These were the two options that we had. We had this area because the market straight up broke down from here. So I expected at the highest point that the market may travel up here. And then it fell from there, started creating resistance, building it at this previous support structure, which again, we identified this that man, the market should want to come back to this position at its highest point. It did push up here. This was Wednesday. What happened Wednesday? I got to look what happened Wednesday. There's so much that goes on with the market. And this was basically the final day. Thursday was basically your move. So if you didn't even trade the entire week and just um, jumped in the market on Thursday before opening bell, I wouldn't say before, but basically at the start of New York, yeah, you would have had a clean sell that brought you all the way down here up until Friday, 12 o'clock. But now that we're at that gap and we're at the open of that new monthly candle, which it looks like we tested it, tested the wick, a certain percentage. I think that this market is buying up as well. So we just have to wait and see what Sunday brings us as far as like the data. But I'm hoping we gap down so I could just buy up from there. But if we gap up, I'm still thinking it's still a buy, but the market probably will want to reclaim that area if it does gap up before it starts trending up, and then we may have to look to see how it rejects areas on Monday and Tuesday. But that's all I got, traders. So I'm gonna pass it on to my co-host. I'm gonna go ahead and let him introduce himself. Let me go ahead and make you host, bro. So you can go ahead and give the people what they want. And you can go ahead and close this out as well, bro.
Uh, Appreciate that, Antoine. What's going on, traders? My name is Chris Cooper. About the new educator with Digital Ghost Academy. Just about to give you a little review of the week of the previous week. Let me go and share my screen with you guys. It's been a pretty good week. Everybody made money in the community. I like that. It's been a good week for us all. Let me go and get to it. I'm gonna start off with the Great British Pound and Japanese yen. So of course last week I anticipated that the market was gonna keep pushing up, but obviously had to do a little correction before it did anything. So where we started Sunday right here. So as you can see, the market pushed up just a little bit, and it was just building resistance right up in this area. That's all it did. As you see, Sunday it pushed up, pushed back down, pushed down, and pushed up and retested the same area. And Monday we had a major sell off, sold all the way off back to this area. And this was what Wednesday, and Wednesday is when they had they interest rate decision. So of course that made an influence in the market. So if you scale back out to the 4 hour, all you can see the market finally reclaimed this gap over here. It came back and collected that data, and then it started pushing up. It just started pushing up and bought up until bought up until Wednesday evening, late Thursday, I want to say. Drop back down to 1 hour, and all it did so far was consolidated for the last few days of the week. It just consolidated in this area, this yellow box here, and it finally broke out of it on this is what late Friday, 1 o'clock. This 1 o'clock candle here gave us a bullish engulfing candle, and it retested this consolidation on this candle here and pushed up from there. Now, of course, we gotta wait for the market to open up and give us more data to see what's gonna happen. So I'm thinking we're gonna stay bullish because if you scale out to the weekly time frame, as you can see, the initial move was to buy up anyway. And how what I'm looking at right here, it just came back and retested this resistance it broke out of. It retested this resistance it broke out of, and it just started pushing up. Right here is letting me know that buyers are in the market. As you see, this long wick on the bottom side. So for the most part of it, I'm looking for buys this week, but I'm gonna wait to see how the market plays out and go from there. I took a couple of L's in it. Took a couple of L's in GJ, but it's all good. Another pair I was looking at was the Nasdaq. I normally let bro have the indices, but the Nasdaq was pretty good to me this week for the most part. So starting off on a weekly time frame, as you can see, Nasdaq has just been buying up all year. We had a major sell-off this week. So going into the 1 hour time frame, what we start off at? Going into the 1 hour time frame. Oh, not right here. We starting right here. Right here. Okay, here we go. Sunday, market opened up and it bought up. Basically did the same thing every other US 30. Basically did something simple as US 30 and S&P. We it bought up to this area here over until Monday and just build resistance. We had a bearish we have a sell off right here, and it had to come back and retest the same area of resistance. So Monday we basically had a major sell off all week long. I mean all Monday, and then it came back and bought back up to the same area that it broke out of. This red box right here on Tuesday. Tuesday at when is that? 3 o'clock. The market sold back off basically the whole Tokyo, Sydney, and London section. The market sold back off. And Wednesday kind of pushed back up and retested the same area of structure here. And then right here was the initial move that I caught right here on Thursday. I forgot what news that was that came out, but we have a rejection right here. That gave that reject. When you see a rejection, most of the time it's an indication that the market is is going in that direction. It's respecting this area of resistance. And then he had a major sell off from Thursday all the way down, all the way until Friday evening. And I think we had a turnaround at what time this was? Late in the day.
Looks like it did
I
the
think this
same thing as S&P. It looks exactly
is
like S&P.
the same exact move. So if you scale back out to a 4 hour time frame, as you can see, it created a level of support right here on this red box right here, and this is a area of consolidation right over here. I'll draw another box right there so you can see it better. Should have been had that. Let me change the color on that. Let me say yellow. I like yellow. All right. So as you can see, it basically did the same thing like bro said as the S&P. This is an area in consolidation. It came back and pushed back down and retested that area. And as you see over right here, it created a level of support. So what I'm thinking with this bullish engulfing candle right here, we I'm thinking we're gonna have the market's about to continue back buying up. If you scale out to the weekly, you can also see all it did was corrected itself. It just came back and retested this area over here and it's pushed and rejected it and pushed back up. So of course you gotta wait to see what the market does, opening bell and get past all Monday and Tuesday to get more data. But I'm initially looking for buys for the most part. I'm just gonna wait to see. Of course, the market is gonna have a pullback just because of it has to retest some initial area of this candle. I'm maybe looking for 50% of it. 50% of this bullish engulfing candle. Between 50 and the 618. That's what I'm looking for a retest before I take any initial buys. And I'm looking for the market to continue pushing up from there. And that's all I got for you guys. Let's all make some money this week and have a great week, traders. I'll see you guys next week.